Hey Sub2ers, the question today is, are there any red flags to the bank if you take over a loan that's a HELOC? And the answer to that question is, well, first of all, most of the time if you take over a property, it's going to have a primary loan on that thing, a first mortgage that's going to be the substantial part of what's owed. And then if you do take over one with a HELOC, most of the time it'll be small, usually 10% probably or less of what the overall financing is on the property. Now, I have seen some where the HELOC was actually the larger of the two loans. But remember this, as far as it being a red flag, probably more so than fixed rate long-term financing, simply because once a 30-year note is put into place, it's pretty much set. HELOCs typically adjust in 1 year. I've seen them go every 3 years, sometimes longer, but typically they're going to be reviewed every year for an interest rate adjustment, because usually the interest rate is going to be tied to whatever the current market rate is. So for that reason, they are scrutinized much more closely. I don't like to take over property subject to when there's an extremely large HELOC loan out there, simply because there's no certainty with that. When you're dealing with financing that can adjust on a yearly or every 2 years or 3 years basis, you never really know what your payment's going to be. If interest rates go up significantly, your payment could go up significantly. They're just not fixed rate. And not only that, but they can be called due at any time. I'm sure a fixed rate mortgage can too, but HELOCs, they can just decide to cut them all off. Right now, we're still in the COVID situation, and credit card companies are closing accounts. Banks are shutting down HELOCs just because of the current environment that we're in. So they're a lot more risky, and for that reason, I really don't like large HELOCs. Something you can pay off easily, that's a different story. So the answer to the question, is it a red flag for the bank because you take over the note? Not necessarily, but every year at that review, it will be looked at. There could be rate adjustments, and they could just decide not to extend that HELOC any longer. So for that reason, they're a little bit risky.